We're here to bring you the latest.
Good morning from London. I'm Rashad Salam.
Over to Frankfurt, where we have some news breaking.
And in London, we have
Ryan Chilton joins us from Berlin.
Francine Lacroix here to bring you the latest.
In New York, tell us what's driving the agenda.
Chicago, where President Obama has just...
So over to New York, where the markets are due
And
to
now
open in
it's
just
time
10
to
minutes.
go over
in
to
Hong Kong. We've got
Tokyo.
Bloomberg's Happy standing by.
The latest market moves. There, Zeb Eckert is standing by.
Breaking news and in-depth analysis around the clock, around the globe.
The Bank of Georgia has started trading here in London. Ahead of that listing, it's been the subject of overflowing enthusiasm from some quarters. According to stockbroker Seymour Pierce, it has the lowest risk balance sheet of any bank in the FTSE. And one reason investors are getting excited is the exposure this bank has effectively to Georgia's rapidly expanding economy, something Georgia's top central banker says is set to continue.
If we can manage to repeat the same story of success in terms of growth in the next 10 years as we had in the last 10 years, Georgia will become one of the leaders, so-called high growth countries. And this is something which is our primary aim, and this is something we're headed to.
But investing in Georgia isn't without risk, according to Seymour Pierce. It says the country is an open economy with exposure to trends in world trade, but the main risk is that the country catches the Irish disease. I want to head live to the London Stock Exchange now, where we can speak to Bank of Georgia's Chief Executive, Iraklii Gilaury. Thank you very much for speaking to us. And so as we were speaking, so just explaining there that the Bank of Georgia intending to effectively reincorporate as a UK holding company. So that means that your global depository receipts will be replaced by normal shares. Just tell me a little bit more about what you're hoping to achieve from this.
Our primary goal is to increase the liquidity of our stock. The Bank of Georgia is held by 95% free float basically, and our investors obviously demand higher liquidity, and we are tapping the larger investment pool, investor pool. It went up tenfold. So it was a very critical step for us to come to the premium listing market and offer our stock to the UK investors, and we have something to offer. As you mentioned, we are rated as a lowest risk bank by some of the analysts because our leverage is 1 to 5. It's a very low leverage bank. And obviously the story what we have is 20% plus loan and deposit growth what we are having per year and we are returning on equity. Our return on equity is around 20%.
I understand. So the idea here is to expand your exposure to investors, and as you say, I mean, your shares have been amongst the best performing compared to shares from other banks of the former Soviet republics. Talk to me about how the financial crisis affected you.
We went through the financial crisis that we did not need even 1 penny of the help from the government or national bank or whoever, and this was a very important step for us. And the reason why not only Bank of Georgia but whole Georgian banking sector came through the crisis very strong, and the reason is a well-regulated environment, banking environment what we have. As I mentioned, the ratios are very strict. It's 1 to 5, 1 to 6 maximum of the bank can leverage in Georgia, and our liquidity, we are sitting on plenty of liquidity. More than quarter of our balance sheet is in liquid funds.
Despite all of that, shares are down 1/3 from their peak in February. Are you worried about market volatility hurting the share price in the next few months?
For us, very clear as a management of the bank is very clear. We need to keep delivering on the results, and we have delivered, I think, the excellent results of 20% plus return. That's what we've been delivering, and we are delivering the growth and pretty low risk at the same time, because loans to GDP in Georgia is very small. It's around 30%, but the market volatility can continue and will continue most likely. But our job is to do what we do the best, and the bank has more than enough capital to double its loan book actually for next 3 years.
And if I could just pick up on that point you make about loans to GDP still being quite small in Georgia. I mean, you hold some 36% of the market in that country. So I suppose many investors would be saying, well, how much more can you grow given that, you know, there isn't robust demand for loans over there?
It's very simple. The Georgian economy is growing very rapidly. Last year, Georgian economy grew 6.8%. In 2010, it grew 6.5%. The inflation, what the emerging market open economy like Georgia is, we have around 6% inflation. So that gives you a nominal growth rate for loan book to stay. Let's say that penetration would stay the same what we have right now. It is around 13%. Of the loan growth, and plus we are obviously picking up the penetration because we are way below the Central and Eastern European average, or even if you look at the regional average, we are half of what for our neighboring countries' penetration is. So I think that there's plenty of growth, and the good thing that we have a very strong retail franchise in the country to capture the growth and ride on the back of the Georgia success.
Gilauri, Bank of Georgia CEO, thank you very much for your time joining us live from the London Stock Exchange today.